Good morning and welcome everyone to Planning and Scanning for the week ending, of course, the last trading week of the year for us here at Trading Triggers. And this week is going to be quite interesting. We've got a lot of reports coming from abroad, Europe, especially Asia. This week we have probably the foremost important and all-encompassing event will be the Fed announcement on Wednesday. Make no mistake, I think this one here, I don't know, there's several outcomes. The market's either going to go up, down, or sideways. That's the outcome. I mean, I hate to be so vague about it, but if the Fed says, yeah, we're still not happy, quantitative easing forever, you know, at one point with the CPI coming out tomorrow, full moon tomorrow, they always say full moon reversals. I mean, I'm throwing everything at the kitchen sink. There's a couple of earnings out, but I mean, for the most part, we've seen, we've got, you know, another event. It's called expiration. So we've got the quarterly expiration, quadruple witching this week. So, oh my goodness, you want to talk about a perfect storm. This is the week for a perfect financial storm. Fed, full moon, quarterly expiration. Can't ask for much more. I guess you could if you're a farmer or rancher or cattle trader. You've got the cattle on feed report coming out. And then again, next week, the day on Friday, like anyone really cares, but the quarterly hog and pig inventory report will come out. And again, we'll have the quarterly information, and it's just going to be kind of crazy. So next week, Monday is, you know, the markets are open, but seriously, I'm not sure many people will be watching the markets just to make sure nothing happened overseas in Asia or any follow-through from Europe, from maybe a Fed speak or a European central banker speak. But Tuesday, Christmas Eve is a half a day. Wednesday, of course, is markets closed. Thursday is Boxing Day. Most of Europeans don't even show up. So that leaves Friday for those that really love trading on a Friday. And many of you have been to our live trading events, and we've had a few on Friday the 13th, and I said I'd never trade on Friday the 13th, but in any event, Friday the 13th was also, for those that were there in attendance, saw me trade live, take a low close doji in the pre-hour session while I had was suffering through not one, not two, but 3 pulmonary embolisms, which are very large blood clots in my lungs from a direct result of flying. That was a Friday the 13th. So for me, I mean, I think one starts to gain superstition, but they start looking back and they go, Friday the 13th, do I really need to press it? But more importantly, I think Friday of Christmas to New Year's, do you really need to trade that day? I don't know. But I think what I wanted to go through today in planning and scanning is next week, I will have the list of my stocks for Christmas that are near 52-week lows, or those stocks that are looking ripe for corrective moves to the upside during the first quarter. So I wanted to announce that for those members of Trading Triggers University. So we will be putting that list together, and even though the room will be closed, we will make that list on a video update on the bottom line commodity report will transpose itself to, you know, looking at all the markets, including that list. So I will send an email alert out to all Trading Trigger members who have access to that, so you will get that list. All right, so let's take a look. In the video last night, I did a little bit of analysis, and of course I did it before the market opened. This was kind of a doohickey downdraft last night that, you know, that's the funny thing about these markets is that, you know, you look for them to trade at certain levels, and sometimes they're untradeable because they happen overnight. This was such a quick blast to the downside. How is the market going to end, number one? And number two, we have a daily doji on Friday. I would say, truthfully, today, what I would be concerned about is if the market trades back below today's opening range. So we're at the monthly pivot resistance, these 2 moving averages. Let me change this over to a weekly chart. And we have weekly resistance. We formed a weekly low close doji. So we have resistance way up here at on the weekly charts at approximately 1780, let's call it 88, 1790 area. All right. So that's a huge, you know, from the low 50s up to, that's a 40 handle move. It's a lot of volatility. Last week we did see a crossover on a weekly basis, and typically when we get these little low close dojis, we see follow through the downside. So instead of selling the snapback, because here's the problem I have, the sell-off was not on great volume on the weekly basis, and this is a seasonally strong period of time. So with that said, there's one other element that's kind of missing from this market, and that is weakness in NASDAQ. NASDAQ is the strongest sector. All it did is, if you noticed with the S&Ps, the Russell, and the Dow, they're all below the monthly pivot. But the NASDAQ is above and been trading above its pivot. So even though we saw a decline in the advanced levels or the breadth analysis, even though it was on significant volume, we saw this tremendous snapback on hardly any move to the upside on Friday. So with that said, look at this. So that's Friday's price action, unchanged. So they were actually buying this market on some pretty decent volume. So for me, looking at the market on the NASDAQ, all this market did was just snap back to the moving averages, snap back to the monthly pivot, and what we probably are looking at is, again, I hate to say it, the theme of sector rotation. So until the NASDAQ gives it up, maybe we're just looking at oversold values here, and we need to be aware that even though we got a move, and I can share with you here, underneath the monthly pivot, we came to monthly pivot support in the overnight session. So this could be almost a situation where we could create an equal yet opposite formation on a weekly chart. So here's what makes it tough. The advanced decline we have, we've been warning about this divergence situation, and with the advanced decline, so we've got divergence, but the market moved on a little bit stronger volume. We didn't break any of the moving averages on that. So the fact is that we've got quadruple witching in of itself can alter markets directions, but we have the Fed, and that supersedes everything. And I'm sorry, but my technical analysis prowess, you know, everything, the powers that I have are just not good enough to fight whatever the Fed is going to say. I can take a look at some of the other markets that would be maybe, you know, indirect relationship with what how the equity markets might move, and we could take a look at those. But even the bond market, and by looking at the knob spread, which we did in last night's video, I can't really get on board with saying, yeah, maybe they're going to be buying bonds because you know, the Fed is going to continue with quantitative easing, and maybe there's a downturn in the economy, or stocks are overbought, and you know, all the other gibberish that's been going around. Newsletter writers from the American, the AIII, are like 54% bullish, and I mean, that's a pretty significant number. Everyone's bullish in here. I mean, I'm not going to go on that type of contrarian indicator, but I will have to say that overall, the market here, as far as the equities are concerned, it would be nice to see if the NASDAQ had started to respect some of its brethren indices, such as the Russell and the Dow. And I wanted to bring the Russell to your attention because here's the story. So last night, in overnight action, what I would be looking for today is if we take out, and again, this happened in the overnight session, but if we take out again that low from this high now, Friday's low. If we take out Friday's low, and I think now what we need to watch is watch to see if we trade from this level high. If the market's going to be bearish, and this is maybe a bear flag, which, boy, that was a really strange downturn in the market. But we're going to have to take out that opening range. So you want to watch the daily opening range from Sunday night, not the open outcry session. You want to watch that area start to get more negative. And if we break underneath Friday's low, then we start to see more of a continuation pattern. And so that would be some of the areas of interest that I'm looking at to confirm continued weakness in some of these indices. Okay. I just want to quickly review, because many of you may not have seen this, but copper prices typically bottom in early mid-December. The volume level is absolutely incredible. So, you know, copper prices is kind of a harbinger of how the economy might perform. And so if we see an increase in demand for copper or a reduction in supply, so supply can go down, but if there's no demand, price won't move. But if there's an inventory decline, which I hear there's an inventory decline, and again, with the London Metals Exchange and all these other reports that come out, you know, I through my 35 years, I've always looked at reports and the fundamental reports, and they've been down, and then, you know, all of a sudden a mysterious 2 million tons of product shows up somewhere that they forgot to count, and the market goes limit down. So I don't really trust a lot of those fundamentals, but I would say what I would trust is that in this longer term formation, in this breakout of the market, we've seen a massive amount of accumulation. I mean, look at this on-balance volume level here. So we are trading in volume level. We are trading at about when prices were trading at around 379, which is around almost 50 cents higher from where it's trading right now. So this type of formation gives me the indication, if we see here that you know, you have this like up pattern, it moves down, but when it moves down, there's no volume associated with it. And when it breaks out to the upside, boy, they really pack on strong volume. So copper prices, this is the one thing that kind of worries me about the equity market, because if copper prices continue to rise, and if we take out this 335 area, which is a very stiff resistance, you can see on your charts, it's like these two spike highs right in here, okay? So you got this equal and opposite, and the market went down. Then it tried to come back up and test it, and it failed one more time. So, you know, we always say 3 times the charm. So if we take out this level, and if you just drew from, you know, a simple little resistance line over these tops, you'll notice that we're starting to break out and on good accumulation of volume. So copper prices, I got to keep my eye on that, because, man, I'm going to tell you something, folks. That's a little bit of a concern, that if the economy is not that strong, then there's, on a global scale, then there should be no demand for copper. All right, so what does that really mean? Well, if copper goes up, it's not really linked to what the Fed might say, or is it? If the Fed say the economy's still strong, we're going to taper, maybe you get a little bit of a correction in the equity market, and then you get, you know, your quadruple witching. But then watch copper prices over the next 2 to 3 weeks as we get into the first of the year, because if they still maintain strength, it shows that there's still demand. Boy, I'll tell you what, I don't think that just as the market kind of showed us today, there's going to be strong demand under the market for stocks still. All right. Now, this is crude oil. We generated a quasi, because it wasn't quite the doji. You had an open here at 55. It closed at 50, but it was less than 8% of the overall range, the open-close relationship. So we generated a low-close doji. We generated a sell signal. So we snapped back to the moving averages here. So the market at this point in time, I think that as I was talking about last night, watch around, I said 97. If it's truly bearish, we shouldn't even get up to around this 97.30, and it briefly traded up to, as you can see here, a high of 97.51. It snapped right back into those moving average. Here's my problem with this. If this market is going to be bearish, right, then it shouldn't take out that high or close back above on a higher open. So this should not be, if it's truly bearish, we wouldn't want to see an equal and opposite or close above these moving averages or close above that high. That would be an equal yet opposite, or in fact an equal yet greater. So the moral of the story is, I would be saying if the market's truly bearish, what we're going to see is what? Lower highs, lower lows. So if the market in crude oil is going to start to decline, because if, let's say, the economy or people aren't supposedly traveling as much. Remember, during the holidays, we always pay up for prices. So the holidays are upon us. People travel. Next week is going to be a heavy traveled week. So with that said, if crude oil does break below not only today's low, but Friday's low, then I think you're starting to see this you know, a sell signal, and then you just start to sell resistance on the way down because it starts to prove itself is in a bearish mode. Looking at a weekly chart, okay, we have a benchmark here. Everyone sees that bullish engulfing pattern. So that's, you know, that's why it's important to look at multiple time frames. So anyone that's short term looking at the daily charts and they're not looking at the weekly picture, all this market did, right? It's coming right into the weekly moving averages. So we're going to have to see the market get below last week's low. That's why I pointed out to you on a daily chart, last week's low happened to be Friday. That's why it's important. And so if we start to see price erosion and weakening prices after a tall breakout candle like that, all right, then we're odds favor the fact we're coming back into the 90s. Until then, folks, watch out for this market because this sell-off, right, this decline we kind of warned about with that doji right there, it really started to dry up. The selling pressure dried up into the marketplace. So crude oil might just, you know, at this point in time, I think you have a better shot that if this market takes out that doji high right there, if it certainly takes out this swing high right here, 98.77, you probably got, I mean, a better shot of seeing, and I hate to say this because that means we're all going to pay dearly for prices, higher prices closer to the 102 level. So this is a market that we want to, we're kind of, like a lot of the markets, stuck between a rock and a hard place. So if we take out 98.75, we got, this becomes more of a continuation pattern, up, sideways, breakout. So this would be a failed sell signal. This becomes a failed low close doji, and a lot of us, we all see that type of pattern where the market gives you the low close doji, and then the very next signal, or it gives a sell signal, and then the very next signal, it's like this buy signal, it gives a buy signal, the very next day it negates it and it goes down, right? So if the sell signal, if this is a clue, if we generate today or by tomorrow a reversal buy signal, man, this thing, crude oil, we could see quite a significant move to the upside, $2 to $4. That's the call there. All right. Gold. I wanted to move over with gold. Gold takes out, again, if gold takes out Friday's low, more importantly, this becomes more of a continuation pattern. And so one of the things that I would say, a continuation pattern, we got to make sure that if it does take out Friday's low, comes up near resistance, which is the moving averages around 1240 or so, and then starts to roll over. And I know selling back down underneath 1220 is $20 away, but look at this. If this is a high and that's a low, this is a swing. So if that's an A, B, this is C, D would be way down here. All right? It's going to take rallies above the monthly pivot. Remember, we're still in a monthly bearish technical aspect from person's pivot indicator, but it's going to take closes and trades above last Tuesday's high. I just wanted to make mention of that. That's gold to really get any meaningful upside move. All right, so those are some, I just wanted to go over those particular points of interest. And like I was saying on the video last night, as far as the knob spread, I'm going to see, in order for me to say, yeah, maybe bonds can go up a little bit, because seasonally they do go up. If people are nervous about the equity markets going down, if they're nervous about the Fed raising rates, price goes down, rates go up, it may be priced into the bonds, but if rates go up, will it be more detrimental to equities? You know, and so for me, this is kind of a very tricky spot to be in. I don't touch bonds until I see this knob spread get well over this blue line, and that blue line up there is 526. Let's call it 6 to be friendly, okay? And so I would say if you get a higher high, higher low type of situation, then that tells me that bonds could rally. Yeah, where are we going to go? Probably one back up to 134, 133, somewhere around in that level, all right? So we are testing a downtrend line and a swing high kind of thing. And if we do see a breakout of that downtrend, we have the capacity to come back up, like I said, 133, 134 in the bonds from a 129.30, 130 area. So there is that capacity. What would cause that? Well, think about it. If the Fed says, nope, we're going to continue buying bonds, then bonds ain't going down. That's it. The economy's still not that strong. We see problems on the horizon. Inflation is still contained. It's not a problem, even though we're all paying higher prices for pretty much everything, from cucumbers to milk to you name it. Taxes to gasoline to Power Ranger toys at Toys R Us. We're all for the grandkids. We're all doing our part to pay more money. So the only thing that's not costing us more money than 2005 is real estate, but you know, you can't sell anything, and it's all a different situation. So I just wanted to go through some of these commodity markets that are linked and tied in to what potentially could be market movers this week because of the Fed and because of some of these reports in quadruple witching. All right, so let me go over real quick, as we always do, and just take a quick look at the advanced decline. I know I went over it with the indices on a daily basis and a weekly, but boy, I'll tell you what, man, strong hammer followed backed by a doji. That's a pretty bullish kind of pattern that all the markets kind of formed if you look on a daily basis. When you look at a weekly basis, all right, yes, we could see a little spike to the upside. The S&Ps, and I'll change this to spiders real quick because rollover had a lot to do with these technicals. And, you know, when we changed the difference between December to March, there was a lot of adjustments that could be made. And a lot of people don't switch just because they make you or they suggest to you to get out of, you know, trading from December into March. Truthfully, like the first day of rollover, there's still more volume day trading in the Dece contract than there is the March. And so was, again, on Friday from a bid and ask standpoint. Just look at your domes and look at the bid and asks. And we did that in this past week. So, and notice that. All right, so looking ahead, the spiders did form a low close doji and a weekly sell signal. You'll notice that when I change this to the cash market, on the Qs, we just formed a potential bearish engulfing pattern, but all we did was come right down to the moving average in a strong uptrend. Looking at the Russell, when I change this to IWM, now we did break below the moving average and below the prior week's low at quarterly, and all these indices are at quarterly pivot resistance except for the NYSE. The NYSE, New York Stock Exchange Composite Index, formed a low close doji, a weekly sell signal. So it's this is kind of the week that, how many times have we seen where we get these sell signals, right? And then bang, the very next week it's negated. So if the market is going to be truly bearish, here's the story. I'm really not, with everything that's coming out this week, all right? With everything that's coming out this week, quadruple witching, Fed, economic reports, stuff like that, selling a retracement into the moving average sets you up for a false sell signal. In other words, the market could reverse and go straight back up again. If the market's truly bearish, then I want to see where the market opens. Let it trade higher. And if it starts to close on a daily basis below that weekly opening range, then I want to get short and I want to start selling once the market proves itself. And how would it prove itself? If we start making lower lows on a weekly basis. Because even though you're not selling high, you're selling lower, but you're selling with a confirmed signal, and it increases your probability of success. Okay? So watch for that. Don't leave sight of that. All right? So looking at all these markets, including the Dow, it's the same story. If we trade back up, this could be a week where we form equal and opposites. All right, next, scanning and planning. Now, because the market was so bearish last week, and then now we're just negating that. What I wanted to look at was, I was looking at a lot of stocks with, and this is very important, a lot of weekly low close dojis. But then when I did the next higher degree time frame, like this is Johnson & Johnson. Johnson & Johnson has a weekly low close doji. look what it's doing. It's coming right to monthly support. A lot of names that I had for weekly low close dojis are coming into monthly support. So I know we have a stock that we're looking at buying a pullback in at PA Stock Alerts, and I want to share this with you because this is a very powerful pattern. All right, it has overhead resistance in moving averages, but it has underneath support on a monthly basis in a seasonally strong period of time. What the key is that I think this market, and this is the type of stock and the pattern that we're going to be looking for, and what our focus is going to be is rather than look for, you know, the markets this week with all this news that's coming out, look for like this type and learn these types of patterns. Because if you notice this wedge formation, I went through a big lesson with you guys, and we reaffirmed that in our mentoring class this past week. But think about this. This pattern, it was almost very similar to the pattern that we saw with gold, that I was trying to get you guys to buy gold a couple of weeks ago on a breakout above 29.5. And I, you know, whether it was done or not, different story, but at least you guys have an idea of what we're looking for. So if this is a trend to the upside and the market goes into like kind of like this little wedge formation or consolidation pattern, and here's the wedge that we start to see, right? Now you see that wedge formation? All right, look at the volume action. This is very critical. So the market has a big rally, and it's associated with a strong move as indicated with the volume. Then as it starts to pull back, right, you see this little pullback, there's like literally no volume on the pullback. And then you get like a 2-day rally. See the 2-day rally right here? And you have real strong volume on that 2-day pullback. You get a 2-day sell-off, right? And the close is lower, but look at the pullback. The pullback is on lighter volume. So now if this thing starts to break out, and I'd say we take out this swing high here, okay, you take out that swing high, which is around 1674, this tells me, especially if it's associated with an uptick in volume, that's a stock and that's a pattern that I want to be a part of. So, you know, we're trying to buy a pullback because it's hard to teach this to people that don't understand technical analysis or can watch the markets. Breakouts, you have to be an aggressive trader, because if you put a stop in the market and it stops well above your stop-in level and you're looking for a breakout, you could have some significant damage. But I wanted to share this with you because these are the types of patterns that I'm going to be scanning for and searching for over the next week as we get into the end of the year, especially for names like, I mean, many of you know that I've mentioned eBay a bunch of times. eBay, by the way, is a candidate for the first of the year buy. And I mentioned this to you, and I'll say it again. Why? Who in their right mind, not many people want to buy someone a used gift on eBay. It doesn't have a seasonal aspect behind it. eBay is more like for people buying their own stuff, but I mean, truthfully, look at December, right? Look at this stock. It goes down in December. They really don't have a seasonal tendency to go up. And if you bought this stock at the beginning of the year, so let's take a look at, so last year on 12/28, this stock closed at 49.81. Just the other day, we were trading negative on the year. But again, it's starting to build a longer term kind of wedge formation that when this thing, if it starts to see, and notice that when it does sell off, it's not on a lot of volume. So if this thing starts to see accumulation, and to me, this is a strong candidate for a significant breakout to the upside for 2014. All right? So eBay definitely has the makings of that same pattern that I'm talking about. So when I tell you that I'm coming up with a list of stocks, I'm pretty excited for it in that sense. And I just, for those that want to look for themselves, start looking for these patterns that we haven't seen, these aggressive moves yet in these names. So anyway, that concludes our session. The market just opened. I want to say thank you all very much. And if we don't see each other or talk between now and the new year, Merry Christmas, Happy New Year. Really glad that everyone is a part of our family, and hopefully we've at least demonstrated a strong sense of at least commitment to your education and financial well-being. And we wanted to say thank you all for being a part of our group here, and hope you've benefited from all the analysis that we put in and the way we teach in the market. So Merry Christmas, everyone. I'll be in and out this week, by the way. So I just wanted to make mention of that. And I got one more announcement. My wife, Mary, organizes. She's going to kill me if I say this, but she organized with a few people, including the Merck and the CME group and Linda Rashke, and we're going to do a charity drive this Friday. It's kind of like a charity webinar event. So there's going to be a bunch of people that are doing things. No one gets the registration. The list is going to be purged. We don't care about the leads. What we care about is giving great educational information and stuff that people can use, some insights in the markets. And what we request is that there's a donation to either a small donation, I don't know, $5 minimum or whatever people can afford, to several charities. St. Jude's Medical, I know we're giving something for our military guys, and I know we're giving something for a recovery center that has done amazing work, and I mean hands-on work for the community here in South Florida, called CARP, Comprehensive Alcoholic Recovery Program. And we have some amazing, just incredibly great charities, and that's going to be this Friday. So I just wanted to make mention of that to everybody. So big thank you to you, Mark, and to everyone. Happy holidays, and we'll be in and out this week in the room looking for, obviously, the last week of trading. This is going to be kind of an explosive week, so hang on to your seats, folks. Thank you all very much.